Good morning, good afternoon, and good evening, everyone. Especially a warm welcome to the people that are in California doing this at 6 in the morning. I've seen you in action last week, so I have some respect for the early hours that you guys are trading. Okay, so let me know if my sound or if my screen is not working well, but I think we should be good to go. I'll review the charts from high time frame to low time frame, as I usually do, and I hope that we can spend some time today on learning how to trade tight trading ranges. Right? I do think everybody has had enough of them, but why not focus on them a little bit and see how you can rack up some points in these tight ranges. Overnight, we had a little bit of a sell-off, at least in the German markets this morning. We were nicely selling off by 100, 120 points or so. So I'm sure that the Globex followed that. Yesterday's price action, we'll go over that later, but let's just start looking at some of the higher time frames. Okay. So starting with monthly, so we're still at the highs around 4,200, 4,150. End of May is next week. So we have about, the next Monday is off, so we have 4 days left for this month. Currently it's a bear bar around last month's open. So it went, what did it do? It went above, it went below, and it went back. So it's outside up, but it's still a bear bar. We're at that, like the range is getting smaller. We're sort of pivoting towards this breakout mode point, discussing, or basically markets deciding what to do. I still have that line in there. I think that we might be able to go there. That is the 1R from last year's October. So 1R, I measured that from one tick below the bar to the close of that bar, and then up. So that is, the close is 39.50.50. So I have to put it a little bit down. Well, who cares about this? Is it? So it's around 43.36. That is a target for these October bulls that bought that close and at least one-time risk reward. I do think we're sort of in a lower high major trend reversal. I told you guys before that there was a channel here on the monthly chart. We broke above that channel. We set a measured move up. We went down to the trend channel line. Usually that sets up some bounce, and then we go back and hit that other trend line. So I'm thinking that we might be able to get to 3,300. This gap, I've marked it because I think it might close. So that's 30.80 on the monthly chart. What would be a good month for a big sell-off? Typically, September, October are months where we could have this big sell-off. So if it's now May, June, July, August, September, that could be a sell-off, but it could also just be next year, January, February, or even next year's October, right? So we're stuck in a range, big up, big down. Bulls try to get that 50% pullback on the monthly chart. They want to get back up to the all-time high and the close of December 2021. They will at some point, but I do think we're going to go down first. Weekly, we are going horizontal. So option writers in strangles are making a fortune here. But there's not much, I mean, the swings are about 400 points, but there's not much movement up or down. There are some nuances here in this tiny little range that you can see. Most notably, all of the micro gaps are getting closed. So the gap to above here got closed, the gap to above here got closed, the gap to below here got closed. Gaps here, this one and this one, they got closed on the way down, and now we're closing gaps on the way up. We have closed already this gap to 40.73, and there's one gap open, and that is this low. So the 4306, which is here, that low, that gap is still open. I'm thinking that bulls are going to close that gap to 4306 and then potentially go one tick above here to 4413. Right? So of course prices are changing as we expire new contracts. So every expiry you need to reset sort of these measurements, because then the prices are going to be different, but the levels stay the same and the targets stay the same. So you just adjust for the numbers. On the daily chart, this is ETH, so this is running. We had a bear bar yesterday below the bull pullback. I think if you bought the close on the 17th or on the 18th of May, you got disappointed by the 19th of May, and so you might have bought that and then exit at that 18 May close. So I think that's what happened here. By the close, it doesn't work anymore. So you get out at the last time that it worked. It's also a failed breakout above these highs, right? So we've been going sideways. We've been trying to break out of it. This was disappointing. This was disappointing. And so there's no breakout, right? What bulls would have wanted, of course, is a breakout above that range and then go up to 43.50. Instead, we're reversing back down, and we've now closed the gap to the May 16 high. We might try to now get below the May 17 low, so that's 41.22. Also here, every gap is closed on the way up or on the way down, except for one gap, and that is there. So that gap there to March 28 high at 40.2375 is a gap that bears on the way down now want to close. They could be looking at a measured move from this range, so the low of that bull bar there, and then a measured move down. That would take us to that point. I think it's a credible point. I think we're probably most likely going to do that. But when we get to this low, there's probably more a bounce going to happen, because bulls have bought here, they have bought here, and they might want to get out, break even first. So it could be that around 41.22 will bounce first and then come down to 40.14. That is what daily chart is telling us. On the 60-minute, we had a huge rally last week for you guys that I didn't attend, up to 42.25, 42.30 area. Super nice breakout here on the hourly chart, and then continuation. Several measured moves there reached, but we're now coming down. So we formed the top, or nested trading ranges, if you will. And we're now coming down to close the gaps here, 41.39, that just got closed a couple of minutes ago. And bears want to get to the 41.25, but it's more likely that we're first going to get a bounce and then 41.25, right? So sell-off was strong yesterday at the close, but it was also more of a trading range sell-off. As you can see here, these bars are not really in a nice bear trend continuous. They have lots of overlap, lots of tails. There's even an inside bar here that most probably marks the end of the selling. And so this is more of a trading range sell-off than a SPY again channel where you would expect a measured move from. So that was the higher time frames. Let's look at yesterday. So yesterday I think was interesting because we opened with a gap down right below yesterday's low, closed that gap immediately. Usually these gaps to daily highs and daily lows close in the first hour or so. And so here it closed at the first bar. But one thing to pay attention to is that even a bull bar here, even if it would close on its high, it's just a pullback from yesterday's close. So you have to see this non-existent bar, you have to see it as a huge bear bar, right? It's basically a bar that looks like this. Okay? And so this bull bar is this bear bar with like a small bull bar, right? And so you don't buy immediately above it. Chances are that you're not going to get much more above it than we got yesterday actually, but that we just sell off for some measured move. So if we are in a trading range and we get a gap down or a gap up, I'm always looking at what the target might be. There's some kind of measured move below that I think in this case the bears would want to hit very quickly. So I'm looking at yesterday's range, for example. So could that be the measured move? I'm looking at this range, for example. So 46 low to 65 high. Could that be the range? And then I see that basically we hit on bar 7 high, we hit the 18 low of yesterday. Okay? So you see that there's a 2-tick overlap between the 18 low and the 7 high. So I'm beginning to think that maybe that is the target. So yesterday's high, yesterday's range 65 to the 18 low. Let me do it exactly. To that 18 low, I'm thinking that is going to be the measured move. So around bar 6 or 7, I'm thinking that a short to that measured move could be what we're looking for. And look at bar 40, right? It exactly filled all of the profit takers at 41.75, 75, and it reversed up from there. So I definitely think that this 18 low test was a breakout, pullback, and then continuation through 41.75. That's on the high, that's on the high level. So I look high level at, I'm thinking that is my target. So we've got a trading range open. I'll go into further detail there, but the high, from a high level, you would say this is the low, that is the high. That is not even 30 points, right? The average has been at least 30 points lately. So I'm expecting either a breakout up measured move, a breakout down measured move, or a little bit more above and a little bit more below. In this case, once you see 38, 39, you know that this is a breakout with continuation. And so at least we're going to go down for a measured move, which we got here on 49. Same thing happened as in the large scheme that I just explained here. You get a breakout, you get a test of that breakout, it goes a couple of ticks into that range, and it then sells off for the measured move. So that's exactly the same thing as what happened here, where you have a breakout, it goes back a couple of ticks within that range, and then sells off for a measured move. So if you don't know what the range is that we're breaking out from, look at the pullback, or take multiple ranges and see how price reacts at those ranges. In general, if you train yourself to find the measured moves and then see price action behave like this, so it comes there, it reverses back up, I know exactly what I need to do, right? That was the range that everybody was looking at, so taking profit there. In here, I know this is a breakout of something. Well, once you see the pullback going to the one low, you know that the breakout is of this whole range, and so you'll take profit here somewhere at the 49 close, or somewhere here when it goes above 50, and you take final profits on your shorts. Okay. Same thing happened here. So there was a range here, 44, 46 high. You see that we have a breakout. We test that breakout point. We come a couple of ticks within that range, and then we sell off for a measured move that range again, right? So it sold off in the first place, and then sold off in the second time as well. Here, you didn't get that pullback per se, but it respected that measured move nonetheless. So you have a new range here. We break out of that range, and we come to 41, 57, 75. Right? So those are the larger ranges, but that was only after bar 30, 36-ish. In the beginning, in the first few hours, we had a very tight trading range. And so what I focus on is, first of all, you know that you're not going to get a swing, right? This is all too close by for a swing. And so I'm looking at the mini trends that are happening within this tight trading range. And so you know that a bull trend is higher highs, higher lows, and a bear trend is lower highs and lower lows. So what's happening here, first of all, I'm not looking to buy. We have a gap down, so I'm trying to sell a pullback, right? So I'll try to sell here below 1, because this is a pullback. When the pullback ends, we could go down, right? I don't get a chance to do that. We'll reverse up. And so now the pullback is 1 leg down, 2 legs down, 3 legs. So bar 5 completes 3 legs. It might be even 4 legs. So up, down, up, down, up, down, up, right? So you can see 3 legs or 4 legs. But what's for sure is that the higher low of the bulls is there below 5. Okay. So if you see all of these movements, the higher low is below 5. And so if we break the low of 5, we're not making higher highs and higher lows anymore, by definition. And so by definition, we're out of a bull trend. This is a tiny bull trend. it's big on a tick chart, it's big on a 1 minute chart, it's huge on a 10-second chart. But once we break this low, we're not in that bull trend anymore. And so bulls will stop and get out. So if you bought this close, you bought this close, you bought somewhere above here, you will want to get out because we just hit a higher low. So either you can take a stop, but what most bulls will do is they'll buy more at that higher low, because now we're in the trading range and that should be the low of that trading range. They'll buy more and they'll get out. So we hit that, bulls buy extra, and the bulls that bought this close, they'll exit here. The bulls that bought this close, they'll exit there, and this whole bar comes down. Right? Now, we're also not in a bear trend at this point because we just made a new high on bar 7. So bears are probably doing the same. They might have sold here thinking that we're now going to sell off. They'll sell extra at their bear stop as well, getting out break even there at the close of 7 on their first entry, or just getting out break even on their whole position. That's how they exit there. So at bar 7, we don't have a bull trend and we don't have a bear trend because now we're basically in a triangle. The triangle, you can see it like this, right? So it's a higher high, but it's also a lower low. So we're in a mini triangle there. It's probably big on the 1 minute chart, but it's mini on the 5 minute chart. And so bulls are trying to get a breakout, bears are trying to get a breakout. But we know that in a trading range, 80% of the breakouts fail. So I'm not going to trade this as how I'm trading breakouts. Right? I'm not going to go into a position hoping that I'm going to get a breakout. I might do it at the high of the trading range when I think we go lower. Then I might put a little position on thinking that we get a breakout, but I'll put bigger positions on at where the breakout fails. And so I'll explain that by looking at, which shall I take, bulls or bears? I'll explain it by looking at the bears first. So the bears are getting in where we break bulls higher lows. Okay, so you can get in here because you break the higher low, but it hits your stop, so you sell more and you get out break even. If you sell more at where your stop is than where you got in hoping for a breakout, you can actually make a profit. Now, I don't sell where the bears get in. I sell where they are determining to break even. So this is where they know they're wrong and they're going to sell more to get out break even. So I don't sell here, I sell here. So I sell the high of 6, knowing that the bears will want to get down to somewhere in the middle here. So if you sold at this level, if you sold at this point, you sell more at that point, the high of 6, then you want to get out break even, which is the middle here. And so I just don't sell here. I just sell the high of 6 and get out there. That's 2 points. Okay. Now you can get into a range like this. You can get at 30 points if you practice that. Bulls, bears, bulls, bears. Nobody in this range lost any money. No bulls, no bears. Even not on this sell-off. The bulls were already out of it. So everybody in this range, as tight as it is, everybody can make money, right? You just have to pay very careful attention as to what's happening with the higher highs and the higher lows. So bulls think, so nobody's in a position right now. We have a higher high and we have a higher low. So there's a bull bar here. And so on some time frame, there's a higher low here for the bulls and the bears break it. And so in this case, we actually got a breakout. So I wasn't in there because I sell where the breakout fails. But if you have a high low there, it failed to give you 2 times risk, but it gave you 1 time risk, and you could get that later as well. So bears know as well that you're not going to get big rewards, right? They take profits at about 1 time risk reward. There was 2 times risk reward on this bar, right? Oh, also not, sorry. So bears have a trend now. 9 goes down, goes up, and 10 goes down. So the lower high of the bears is above 10. Okay. So bears will get stopped out, or they will know that they have to fix their trade at the 10 high. So I sell at the 10 high, thinking that they got in 1 tick below the 8 low. So I sell there, and I take a profit 93. So that's another 1.5. Okay. So I could have already got 1.5 here. I probably could have had 4 here, 6 here. So I'm already here at about 13 points profit. Okay. So now you get bulls in a bull trend because we just broke the bear stop. Now bulls are going to try. So they create bar 12, goes up, comes down. They create bar 13, stays as an inside bar, and then create bar 14. So where's the higher low of this little three-legged, 3 pushes up? Push 1, 12, push 2, 13, push 3, 14. It's a little wedge there, but the higher low of the bulls is below 14. Okay. So once the bears are able to break that higher low, bulls know that they need to fix their trade again. So if you bought the 14 close and you buy more at the 14 low, you need to get out 95.25, and the bar went to 95.50. Okay. So here again, I have like 1.5, 175 points, and then we switch to bear. So now it's a bear trend because we're making lower lows and lower highs. The bear stop is here, right? So 1 tick above the bear bar. We go down, we go up, we go down, and so the bear stop is now above 16. You can see this on a 10-second chart, right? We go up again, we go down, and so the bear stop is now above 17, and then we have an inside bar. Now, I already know that bears are going to exit at that inside bar, so I'll buy just that inside bar and go up, especially with the gaps here to the 16 low. But we break the bear stop here at the 17 high, and so bears are going to fix their trade. They come down to the 17 close. I sell at the 17 high, and I make another, 93.75. I make another 2 points. Okay, and now we're at the bulls level again. So same thing over and over. This will be the last one that I'll explain, but we're making a new high by going above that. We're making a new high. You can see it as we're failing already below the 20, but since we didn't make a new high at 20, you could also argue that the lower high is still below 19. So you could see it as go up, down, up. If you take this as the higher low, you can do the same and then buy at the 20 low and then get out at the 20 close, because some bulls were fixing their trade here, getting out. Some bulls held, thinking that 19 was still the lower high. Both is fine. Then we get 23 up, new high, and then a new high. So at this point, the bull stop is 26 low. Okay, new high, pullback, new high, pullback, new high. You could put it below 27, but I don't like to buy here because we're so high in the trading range. But I did buy here at the 26 low, and then I know that all of the bulls that bought the close here, here, or here would get out, and that's exactly what they did there. Okay, so I buy the 26 close, and I run it up to 96.25, so that's another 325 points, right? And so it starts counting, and you'll do that all the way through. So how did this sell-off happen? Well, the bulls got out here, right? So during 31, all of them exited because we broke the higher low. So bulls exited here, here, here. They're out at bar 31, okay? And the bears now have their lower high here. We didn't break it, so the bears stay in. The bulls have not broken the lower high, so they're not in a trade as well. And we keep this lower high all the way until here, a new breakout, and now the lower high is above 35. We get a new breakout, the lower high is above 37, and the market becomes very one-sided because there are no bulls left that are trying to fix some of their trades. They're all out. Okay? And so the market becomes one-sided because bulls are not doing anything, and then bears just take profit here, and that creates bar 41. We're at that measured move target, exactly what I mentioned there at that tick. And so a lot of bears exit that sold here at the 7. They exit at the 40, and so we get a large pullback before we sell off again. I'm going to come back to that later. Maybe if we get it today, I'll show it in real time. But that is sort of how I look at these tight trading ranges. So I buy, sell, buy, sell, buy, sell, buy, sell. Take very little, take very little profits, but there's a lot of them, right? And if in a day like here, There's probably indeed 40 or 50 of them that you can just take and scalp and scalp and scalp. Even in this range, bears and bulls are not losing money, and then when the breakout comes, no bulls are left in the trade, and that's how that breakout typically happens. Okay, so we are getting close to the open. Let's see where we are on the 60-minute chart. So we had we had a good bear run. There's a range here that we sort of broke out of, so we could maybe see this and this as a measured move target, right? That bull low went into a new range, we broke out of it. We had a little pullback to maybe this, so this could be a range, but I'm thinking this is a range. And so the bears want to target to the 41.22 area. Wasn't that a target on some of our other charts as well? I think it was 41.20, 41.25 is here below. Yeah, so 41.20 or something is a good target. We dipped below this bull bar, and so it's fair to expect a measured move the size of this range to the low of that bull bar to 41.30. But we're also going a little bit more down in trading range type fashion, right? So we went above this bar was small, almost an inside bar. So I'm thinking 41.30, 41.25 is what the bears want, but let's see if we can get a big pullback first, because we're in the trading range still, and we're low in the trading range, and so let's see who is willing to sell so far below the moving average. Today is also FOMC minutes, right? So at 8 o'clock, what is that, 2 p.m. Eastern, we have FOMC minutes. Usually some reaction in the market, not as big as FOMC reports and not as big as FOMC report with a press conference, but there is some movement to be expected around 2 p.m. Eastern. So if you take this range, right, what would the measured move of that range be? That would be around 41.3850. So we just hit that already. What's a bigger range? Well, on a large scheme, yesterday you could also see that as a bear channel, right? So bear channel, we dipped below the bear channel, went sideways up to the other side of the channel, and we made the channel with that a little bigger. And so now we're trying to break out of that channel again and set up a measured move that will be to the 41.18, 41.20 area. This is not super exact, so you always have to take this little margin. And let me also, as a service to the audience, put in the low and the high of the, oh, we already breached the global low. Okay. So that is good. So first bar, bear bar right now. Let's see how it closes. But gap down, bear bar. So the mind is already on where can I short. But we're far below the moving average. So maybe see if we can find a good place to short. In general, I want to see a pullback and then sell when the pullback ends. I do think that looking at the hourly chart, there's a good target there. So that target was this high to there to that low, but this is the pullback, the total pullback. And so when that pullback breaks, it sets up a measured move in the opposite direction for continuation. So that is, do I have everything correct? 41.3075. That should be within reach for the bears. That's there. And bar one is trying to reverse up. So there's some trading range price action in that first bar because it went down and now it's up. So there's a big down, big up in that first bar. So they're closed as, you can either see this as a trading range on the chart, or it's a bear breakout with a pullback inside of it. But better to wait instead of selling below 1. The target is super close, so even if you sell here, that target, like we might just hit the target and it reverses right back up there. So the risk reward for this target is just bad, right? And that means it's a high probability, so we're probably going to touch it. The probability is that we're not going to be getting a huge bear trend, right? First of all, because of the context, we already sold off. We're in the trading range, and traders know that selling low is not high probability. The second is we broke out of that bear trend, and so we might need to test the other side of the bear trend. And the third is, like, because we have news at 8 p.m., 2 p.m. Eastern, we might be in a trading range until then. So let's see what's going to happen. Bar 2 stays as an inside bar still. So you see that no bear is eager to sell, right? We're at that measured move from the breakout of yesterday's range. We broke below the bear channel. Yes, there are targets below, but bears would want to sell here to get to that target. They don't want to sell here to get to that target. Right? Where's your stop? It's not above 1, because if you're selling the breakout from this range to that target, then your stop is somewhere there as well. So nobody's super eager to sell. And that shows in the first bar and now the second bar. The second bar has not even taken the time to get below bar 1 yet. So where is the urgency? Now, on the 50-minute chart, it looks better, right? We broke below this pullback bar. We broke below that pullback bar. So we're getting to those targets, 41.30. Like we're breaking below this pullback, 41.33. So we're definitely going lower, but it's difficult to sell here in this context, because you're selling for 4 points and then a rips of 20, right? Bad risk reward. And so we're probably going to hit it because bad risk reward means high probability. Okay, inside bar, usually end of the selling. So in a range, in a context like this, on a trading range type of environment, it's either the end of the selling or it's some range that will pull back to. Bulls are hoping that there's more buyers below here than sellers. But bulls will buy the low of 2 and they'll buy more lower to get back to the low of 2. That's an inside bar in the trading range type of effect. There will be bear selling below bar 1, but they're hoping, I think, just for 2 times actual risk, and so that is super tiny with that small bar. That will be 29.25. So bears can sell below 1, but they need to sell then more above 1 to get our break even. And so I'm not selling here this low. But if we get this nice pullback, then I would be more looking at selling below that pullback for a measured move down the size of that pullback. Lots of stories about why we're going down, why we're going up. All media attention, like who cares about debt ceiling and all of that stuff if you can borrow unlimited. So lots of stories about why there's a sell-off. I just think it's a failed breakout on the daily chart above that range, and so it was expected that we would sell off. No surprise. But media will always try to find and come up with a reason as to why something's going up and why something's going down. Doesn't matter. Just look at the chart and don't pay attention to all of the news and all of the things, and don't try to explain why price is moving in a direction. Try to anticipate why our price is moving and then trade it. Right? It's amusing to watch it on TV, I've got to say, but it's only amusing if you know that it's rubbish. Right? Know that it's rubbish. Right? So you can say that we have a two-legged move down now, right? So one went down, went up, two went down, made a new low in three. And so bears have a stop here above 2. But it's more likely that we're actually going to touch the other side of that channel now again. So this bear channel was here, and we're trying to break out below the bear channel again. If we do that, there's definitely going to be some sort of major trend reversal touching the other side of the channel. And bulls will know that at some point, we're also going to close the gap on the daily chart. Right? Doesn't have to be today, but they'll scale in to close that gap on the daily chart to 41.53. Look at the daily chart here. All of the gaps have closed continuously. So there's one gap open, as I mentioned. We could sell off to close the gap there and then go back up to close the gap to yesterday's low. But bulls will scale in knowing that we're going to close that gap. It now is more likely that we're going to touch that 41.2575. So if you're trading here, what you want to do is trade small and scale in higher. You can scale in higher to break even and get out. You can also trade super small and then scale in with a bigger position so that you make money if you're trying to break even. Because let's say what's the smallest position? Well, the smallest position is selling one contract on the breakout, and then, for example, selling two contracts on the point where you go and break even, and then you break even on your first contract and your second contract, and you make some money on that third contract that you sold there. If you can't scale in, I don't think it's good to sell around here because it's too low to the moving average. Yes, there are targets that we're 90% sure are going to reach, but your risk reward is overall bad. Right? Let's draw in the real sort of 30.75. What we're going to reach, right? That was pretty sure. That's pretty certain. So it's not sell the close yet because of that inside bar. This should have closed below 1, and then you would have sell the close. I think bears sold below 1 and then hoping for 30.75, which is quite likely. But they are hoping that they're going to get a measured move the size of 1, right? Or at least the size of the close of 1 to here, so 28.50. Okay, I got my 30.75 almost. Yes, thank you. So that can go away. So you see what I'm doing here in trends. What you measure is the size of the pullback. So the size of this pullback, well, if this is the bear trend, this is the pullback, then the size of this pullback is this. And so a measured move down would set up that range. Okay. So on the hourly chart, you can use that. So this was a pullback here on the Globex, a pullback from this low to that high. The measured move down gives 30.75. And so if you see not 1, but 2, 3 bear bars breaking below that low, the measured move is 80% likely. So the 30.75 was pretty sure. But this is not a bear trend, right? Down, up, down, up, down, up. We're continuing, but stalling at the same time, if you will. We're not showing urgency to sell. We're at measured move targets. I still think we'll go lower. We want to touch that 41.22. That is on ETH. On RTH, it is 41.2575. So that is more likely. 41.2575 is there. And we're almost hitting our second target there. Not a fill yet. Partial fill. So it looks bearish, but it's actually a trading range open. And it's because of what you see happening during bar 1, during bar 2, even during bar 3, which was small relative to 1 and 2. And so we're just going to sell off to some target and then either go sideways from there or go sideways to up. All right, so let's see now. Bulls want to get to above 4. So that bears stop selling. Lower high, lower high, lower high, lower high, lower high, lower high, lower high. But the 41.2575 is so close that we might not hit it first time, but then we come around the second time and then we're going to hit it. Right? It's a magnet. If you're having difficulties reading here this bear trend, I suggest you look at a mirror chart every now and then. I'm using it. It's not as precise. Sometimes there's a tick or something off, which for a price scientist like me is annoying, but it gives a perspective of how this bear trend is looking if you have two bullseyes, right? So you see that this is not a strong bull trend, and if we, in this case, go a measured move down, it could actually go to yesterday's high. So turn that on its head. If we go up a measured move, we'll come very close to yesterday's low. Nothing to do here for bulls. Like you don't want to buy, you don't want to be the first one to buy. Like let others buy first and then join them later. We still have some targets below. We just hit that 29.25. Thank you. And then 25.75 if we can get what is risk reward on bar 4. Oh, that is 25.50. So that would be nice to get that immediately instead of in 2 attempts. Look at that. Like, didn't that hit it exactly, 25.75? So can this be a wedge bottom? Like bar 1, leg 2, bar 2, 3, leg 4, bars 4 and 5? It could be, but then still you need more buying pressure to just get in and buy that for the low of the day. I don't think we've seen the low of the day yet, but I also think that we might be not far off from it, but we haven't seen any bull bar. And so I'm not inclined to buy anything. I'm more inclined to sell a pullback or go long as soon as we break out of something, then get a pullback from that bull leg and then buy there, which is a higher low major trend reversal at that point. So 25.75, that was definitely a target for bears. We've been hitting it and being above it for 3 minutes. And the thing to note about these things, and sometimes I used to screw that up myself, is that you have the daily low here, 41.2575 on the RTH, and you have it on the ETH. Okay, that's 41.22. I think we're going to hit both, but chances are that because this is a Globex chart, that we're going to hit that target during Globex hours. And so you need to take into account that if you're looking at the ETH chart, so the Globex chart, that some of these targets are not being met during intraday trading. It might and it might not. The fact that we just touched that target on the RTH and that target was higher, I'll use that as my target. If this was lower than ETH, then I would definitely look at both. But in this case, I use the highest. Yeah, that target 41.2575 is the low of this bar. to the low of May 17. Right, see here the lows, so it's 25.75. Okay, so there's definitely profit taking going on. Bear stop is now for scalp is about 5. I would definitely exit if I was short. The fact alone that we already went up a scalp, almost a scalp below bar 5, and that there were so many, but that was a clear target there. I would take profit on shorts and then see if you can short again. Right? Now look at, for example, here the 50-minute chart, right? So you have either you have a range here that we just broke out of and then expect a measured move, but we already had that. Or you see some type of bear trend that we also broke down out of. And so in both cases, you would expect a little bit of bullishness to go up and possibly close that gap to 41.37. So it's follow through selling, we hit some measured moves. It could be an early low of the day. Could be that we get a deep pullback and then sell off again. We still have the 41.18 and 41.22 targets. But considering that we had so much price action that was in a trading range, so this was trading range, this was a trading range, and then a breakout below. Yesterday ended in a trading range. We broke below that trading range, set up a measured move. And so that 38.50 measured move target could be a good target to come back to. Because bulls will scale in lower, and then we want to get back to yesterday's low. Often when you get, when you're in a trading range and you get a measured move down, often you get a pullback to the breakout point. So in this case, where you already had a breakout of that first range below 10 here, you get a pullback to that point. Now we didn't have a pullback to the 60 low, but we broke below it. And so if bulls are able to create some action, we could actually just go to yesterday's low. But there's nothing to do here for bulls. Every bar is a bear bar. It's a micro channel. We haven't even seen a high run. That's not going to work in the trading range, a high run. It's a breakout setup. So you don't want to be, as I said, you don't want to be the first bull buying, especially not above something. If you're a bull right now, you're buying below something. So bulls bought below 2, but they got the smallest scalp possible. They probably bought here at the measured move or below 5, and now we've closed the gap to the 4 low. So there's a gap open to the 3 low that bulls now want to close, but they're not buying above anything. They're only scalping below things now. So you can't buy above a bar expecting a 20-point scalp or a 20-point swing, right? Let's see what happens if would this pullback fail. It would set up a measured move to 41.20, 41.20.50. It's a low one, so it's probably going to fail, but that doesn't matter because bears know how to get out if it does. Right? I think it's likely we'll go back to 41.37, but bears are still selling even at the lows. So if you sold below 6, you got a couple of options, right? First of all, you know that the pullback was bar 6, and so 2050 is the measured move pullback from bar 6. You can also think, well, I think it's more of a trading range than a trend, and so I'll take 2 times actual risk, right? So if I sold a tick below 6, my actual risk is there. I want 1625 as my 2 times actual risk. My 1 time actual risk is close to that 2075. So 1 time actual risk selling below 6 is 2075, and the measured move is also 2050. So that is likely to be hit. Setting the close of bar 7, that gives 1875 and 1325. So it's good to be short or flat, right? But that's evident here. Where can you enter? I think you can enter below 1. So when 3 goes below 1 and not below 2, when 3 goes below 1, that pullback that was here gives up. So you can sell on 3 when it goes below 1. You can sell below 3 because there's a pullback inside 3 as well. You can sell below 6. That's the point where I would sell. But if you're selling here, you also need to account for getting out break even. So be able to sell more right now at the 7 high, for example. So you'd sell below 6, you sell more here to get out break even, which would be, if you sold one tick below 6, you sell more above 7, then 27.25 would be your break even point. 27.25 would be your break even point. So now I want my 20.75 and then hopefully 16 and 12, hopefully 16 and 12. Five ticks, come on. Come on. So remember I said the 41.22 was the low on the RTX chart, right? So we just got that low as well. Sorry, wrong chart, this one. Just got that low as well. Now what the bears want is that this becomes a range, and now that they're broken out, that we get a measured move down and close that gap. We might, but there's also bulls that bought around here that now want to get out. So they'll buy here to get out break even here. They'll buy more here to then get break even somewhere here. 95% chance they can get one of those. So if you buy here, it's a logical buy. And then if you get stopped out, then you don't take the stop, you buy more, you get out break even, or you buy twice more here, then you get out break even somewhere here. And that usually works. So 20.75, please. That's 2 contracts for 1 month trading room. If you sell now, bad risk reward. But the bulls break above 7, then the bears will want to get out. Right now they're holding. 22 is definitely some support as well. Huh? So what I said on this chart, we can still go down, but on this chart, daily bulls are buying, hoping for some sort of a double bottom and hoping to get out break even on earlier entries. And they'll do more at 40.15. So 41.22 is support zone for the bulls. Isn't this bear leg stronger than you anticipated? Someone's asking. Yes, but that doesn't matter. We're trading the chart, and we're not trading my premise. So if it doesn't go up, I'm short. Right? It's good to have a premise, but you need to throw that overboard in a single second once you see something that is different. And so if the market's going up, my anticipation of an early gap close to yesterday's low is out the window. It's still a micro channel, so what do the bulls need? One big bull bar is not enough. That would be a trap. They would need to break the 7 high. There's sellers there, so we would need to come back down. There could either be a lower low major trend reversal or a higher low major trend reversal, but you need to break this with force, then pull back and test the lows, and then roll. So it's a long way from buying anything in here, right? So if you're a bull, it's better to just go play outside for a while, because you need some breaking of the selling, some stalling, some retesting of the low, and then some long. There's a lot of repetition in the markets. Sometimes the US Open looks a lot like the Europe Open, and today is no exception. So if I can, how can I do that best? Let me do it on my second screen, prep it, and then. So this is the German market this morning. So you see a sell-off at the early stages. We've got a huge sell-off this morning, also below yesterday's low, in like a wedge shape. We broke here that steep bear trend. We tested back, and then we tried again, but now we failed again, and we continue to sell off what we're doing now. So what happened this morning in Europe, it sometimes a little bit of indicates what might happen at the open in US. And so this is what you would need. Like, this is a sell-off that is just as strong as we have now, so you need a break, but this is a trap. You don't buy that unless you're buying here. And then you get a second test. Maybe you go all the way up. In this case, we didn't. We failed at that high again and then sold off, and then got a measured move down. We're now at those support levels on Germany as well. So good bar 9 for the bulls. Some bears would sell more there and then get out, right? I think bears are still holding. As long as we don't hit the 7 high, the bears will still hold, and see if we can now break this pullback and get a measured move on that pullback to 41.16. It's a wedge now, huh? So now you can better say 1, 2 are the first leg, 3, 4, 5 are the second leg, and 7, 8 are the third leg. So we have a wedge, but what does that mean? The wedge can turn into some sort of reversal, but the wedge can also fail and actually set up a measured move, the size of the wedge, to 41.03. Okay. Now, if we now break above 7, then the bulls have stopped the selling, and bears will exit break even. So they will sell more 7 high and then get out 27.25. If they don't get that chance, then we'll go up 41.38, which is what I already mentioned, and then their first average was 27.25. Their second and double sell will be 41.38, and then they'll get out 41.3250. Higher chance that if we break the 7 high, that they'll get out here, but sometimes you need to scale in again and then get out there. 50-minute chart now also beginning to stall a little bit. It closed inside of the previous bar. There's definitely an end to the relentless selling for the first 8 bars. But bulls haven't done anything yet to break a lower high. Right? So if you're short without scaling in, you should exit. You should exit at that 41.22 already, if you only have 1 contract. If you have scale in possibilities, you should have more scale in possibilities than your current position, so that you can hit it harder when we get higher, right? But it's tough to do. It's requiring experience. I was hoping maybe we could get like these tight trading ranges to just get some experience with that, but a nice swing down and a nice swing up would also be nice. I mentioned that 41.38 because it was the measured move, and usually when you get a measured move, price tends to go down further than the measured move target, but then stalls and comes back to that measured move target usually once or twice. And it's dependent on how strong of a measured move that is, right? If it's a measured move on a lot of time frames, then that is a stronger magnet than just this one, but it's a measured move based on 20 bars, so it's quite strong. So somewhere in the day, even if we go lower now, somewhere in the day, I expect 4138 to be tested. And then you think, well, let's get in already because I see this is as the measured move above 7 and 8, but there is no breakout until there is a breakout. So this could just as well be a trap. And you're thinking, like, if I buy this, it's going to break out and it's going to go there. You can't do that, right? You have to trade what you see and not what you expect. And so you wait, and then you see maybe a pullback. 27, 25, then for bears to get out break even. Well, you see that happening first, and then you see a nice two-legged pullback, 50% pullback, and then you go long. Right? And then you say, well, what if we get a bull bar that size and it immediately ramps the price up to 41.38? Well, then you've missed a trade. So what? Right now the bears are still under control. They're not happy with bar 9, but they're under control. There's just profit taking. This was some profit taking. This was some serious profit taking. There's bears exiting, right? That is, look at this bar. It's quite a big pullback, and it's quite a big range, but they closed very low. This closed on its high, so there's way more. This is not only profit taking. This is also bulls instigating a position, trying to set themselves up for a breakout to 41.38, and they'll scale in lower. Right? So where will they scale in? Well, they'll scale in, and where's it move down from that range? So they'll scale in at 41.15 level, and that's front runners, right? Life of a front runner sucks, right? Because you're taking way too much risk for those little rewards, and so you don't want to be a front runner. You just want to be following what the rest is doing, not what some of these early bulls are doing. They got deep pockets. They can buy all the way here. They'll buy and actually buy bigger here. So their chances of breaking even and making profits are way higher than what we do. So right now, 11 is an inside bar. Inside bars are triangles. There's a triangle line here. There's a triangle line there. And in trading ranges, there's a good chance that there's more buyers below an inside bar and more sellers above an inside bar. So usually selling one stop below an inside bar is not a good thing. Then you would sell not one tick below the inside bar, but maybe one tick below the breakout point. So below 9, there I would sell if you can scale in. And then see if you can get 41.15. No, it's not an inside bar anymore. But you'll get the point. All right, so we broke the 9 low, so that pullback is over. Bears now want to break out. Okay. Ching into Stout House for the 2025, but I want more. I want that range. I want this. I want 41.15. But I'm getting smaller and smaller short, right? Now 41.15 would be very nice. It's a good bear bar, but it's also a little climactic. So you can see it could be a second leg. But what bears are hoping is that if this was a wedge, 1, 2, 3, that this is a breakout of the wedge. It now needs to get continuation to get to 4103. Right? If we now go above 11, that is now the lower high for the bears that, for example, sold below 9, and then they'll get out, break even, selling more above 11. But you also got to wonder about not only the 5-minute chart, but the 50-minute chart is extremely bearish. The 60-minute chart, we're almost closing the first hour. It's almost at the low. The 60-minute chart on ETH closed on bar 6, closed almost on its low as well. So if that wants to have one-time risk reward. We're coming to 41.13. So it's still very, very bearish. I said this could be the range. So on the 60-minute chart, this low, that high, and the breakout below, and that will take us to 41.18. That was the 41.18 line that I have here. I forgot that myself. But 41.18 is the measured move on that. So it's on the 60-minute chart. We spliced right through it, had a little pullback and then went down. If this would be the measured move instead, then where do you go? Oh, do that. Then you come into the 40.95 area. I think that is too far. I think the measured move is to 41.18. Someone's asking, why is there a strong bull bar after a bear bar closing right at its close? So 41.22 was an important target for a lot of bears. And so when the bar closed that hit that, they exited and took profits. Now, this bar is not for bulls because it didn't go above 7, right? So we're still creating lower highs. And so it's a deep pullback. Some bears will want to sell this because the high here is a perfect risk reward for them, right? If you sell here this high tick, or even if you sell the close of that bull bar and you put your stop above 7, 2 times risk reward takes you to 17.75. If you would expect that 18 to be hit, then that close is actually a perfect sell for the bears, putting their stop there, expecting 2-to-1 risk reward. You can see that the pullbacks are getting deeper. Well, this pullback was already deep on bar 1, but this pullback 6 was negligible. The pullback 9 was quite strong. The pullback 12 is quite strong as well. Didn't close when it's high, but it's still more of a pullback, at least a little bigger than 50%. And here as well. So you can see that bears are not selling the lows anymore. They're selling pullbacks only. And it's a sign of the waning momentum. So can this be a spike in a channel like this? So something like a channel with a spike? It could be. I said that this was a wedge and that bears on 11 try to fill the wedge and the bulls are not taking it. So we're probably now going to go above 11 and then bears will try and exit. If they sold below 9, bears will try and exit at, what is that? 24. So you sell more above 11 to get out 24. And then you have a profit on all of your entries here. Even selling below 9, that just broke you even. So let's see. I'll draw this line on the 24. It's only valid if it breaks actually above 11. Where is my... It's only valid if it breaks actually above 11. Where is my... Where's my box? Where's the box? No. This one. I think the bulls got 1R on this one. Yep. So you can see that the bulls are taking profits, not assuming that they're going to get twice their risk. The buy the close bulls here got one time their risk. That was all they were willing to take. Also, the people that bought the 9 close, the traders that bought the 9 close, exited break even, scaling in. So we're officially here in the trading range, but it's still a bear trend. We need to break the 11 high. So it's a trending trading range, if you will. But bulls have now seen that they can make money, right? They bought the 12 close, they got 1 time risk reward, and equal to the 9 close, and equal to the 6 close when we got lower. So bulls are making money buying these closes and scaling in lower. 6 close got hit on 10, The 9 close got hit on 13, and the 12 close got 1 hour. So you don't want to sell at the low anymore. And you probably want to go scalping in this case, because if we hit the 11 high, then the bear trend is over. Bears will convert to scalping and finding maybe a new swing. And bulls will do the same. Scalp and try to find a swing, but for bulls, this is not enough. My rule is I never go long until the lower high is broken. And there's a pullback. You see this a lot of times when there's a clear magic move on a larger time frame that we're just stalling just right before it, and then it takes forever, but ultimately we're going to reach that target. It's not uncommon to expect that today as well, that at some point today we're going to hit 18, or we're going to just go up, and then tomorrow we're going to go below today's low and then hit that 18, right? That's the nastiness of the markets. So if it's a trading range, you always pay attention to the gaps. One gap below 3, one gap above 12. So if we get to 11 high, bears will sell and want to hold until the 12 high, unless we close the gap earlier, but that's where they are positioned. If bulls cannot break that 11 high in 3 bars, there's a point where they're going to give up. The higher low for the bulls is now below 13, right? Up, down, up, a little bit down and up. So right now, bulls do not want to see price go below 13. And the bulls want a 2 times risk reward on bar 12. They correctly saw that this was a wedge and that this is a second entry long after the wedge. But the bears are still holding their lower high, so they don't mind whatever the bulls are doing here, as long as we get a new low and not go above 11. They think it's fine. So what do you do if you're a bull and you bought 13 close and you see 14, right? Would you immediately exit, very disappointed, or would you stay in and hope for the best? If you bought the 12 close, you're still good, but if you bought the 13 close, you're scared, right? You're gonna exit. The bears will sell below 14, hoping for a new low. And this is trading range. So it's actually in the middle of the range. So if the range is this, right? And so we're right in the middle of the range. The bears will want a 2 times risk reward if they sell below 14. So they want 4116 or at least 411925. Bulls think, well, your low 1 failed, and so in your pullback you have a low 1 again, so that's going to fail as well. We're still going to want to break that 11 high, and so we're buying. Bears are selling here, and they're losing, so they'll sell more, get out break even. The bulls want to now set a measured move the size of 11 plus 35.25, where the moving averages. Oh, what am I doing? Escape. Okay, so we finally broke 11 high. The bear trend is over officially now. And let's see if we can get to 24. Okay, so we're going to go above that 11 again, because bulls have tried to break out there once. They're going to try to break out there twice. The bears have left this trade now. So as I said, oh, wait. My screen just died. Where is my Here it is. Okay. Don't touch any buttons, Dan. Okay. So I said, if you sell below 9 or you sell below 14, then that's it. Okay. Playing around with the wrong buttons. So I said, if you are selling below 9 and you have your higher low above 11, you would sell more there and then exit break even. And so that came to 24. That's exactly that low. And so bears exit there. Now bulls broke above that 11 once, and so they'll do it again. So bulls that bought one tick above 11, hoping for an immediate breakout, they bought a small position there. They buy more at this close or lower, and then will go above 11 once more, so that they can take a profit or at least a little scalp profit on their second entry, break even on their first entry. So I'm expecting this 27.25 to be hit. There we go. And the bears are now out of the trade, right? And so like yesterday, it could now become very bullish because the bears have left their position. Some bears sold below 14, did the same. So they sold below 14, sold more at the 27, and then got out break even 24.75. No, it's not the 10 lower high, it's the 11. It's the 11 high, it's not the 10 high. It's the 11 high. You can clearly see that we didn't even reach the 10 high. Like you can clearly see that the scalping and the pulling back began there. So scalpers are selling the 11 high. So selling the 11 high. So it's a triangle now on a small scale, right? So you have a higher high here, you have sort of a lower low there. And usually, if it's a better trend than this, what you'll get is that you'll have a trend. So it's coming, something's coming down. I don't have tools here, but something's coming down. And then the first time that you break that lower high, price goes down and breaks down a measured move. That is in a strong trend the case. So in this case, bears trying to do that as well. There was a lower high here. We broke it. And now bears are trying to break it and set up a measured move down to 41.10.50. Yeah, the bears left their trade, but they can come back in, right? Because the bulls lost their lower high, so the bears are scalping. The swing bears are out. So here, the bears got out here, and now they're trying again, but it's undecided right now. Like right now, you need to start stopping to guess on the breakouts, and you start trading the failed breakouts. And right now, you're in the middle of the range, so there's nothing to guess here, right? And so if you're a bear, right, and you were hoping for a breakout, so you sold below 14, it went above 14, and so you scaled out. Now you sold below 15. If it now goes above 16, you're going to sell there more and then get out break even here. So if you don't count on breakouts like me at the moment, then you don't sell here, you just sell here. And you don't buy here, you just buy here, right? So there's a chance that we can now get a new low, but I'm not in it. I don't want to be in it either. It's way too trading rangy. It's a small range and we're in the middle. So the only thing that going above 11 did was stop this trend. There's no lower lows and lower highs anymore, right? By definition. Because this was the lower high, like down, 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 down. And then when we broke that 11 high, There are no lower lows and lower highs anymore. So the only thing that's now changed is that we're going sideways more probably than a lot further down. And so that's why I said I don't buy above 11 because of the bears are waiting there to sell more. And that sometimes comes at the cost of one bar breaking above 11 and then immediately reversing all the way up. But that's low probability. So it's just better to sell here and get out on your swing, especially if you sold below 1. So that's 33 to 24. So it's good 19 points, 20 points. Do I say that correctly? No, I don't say that correctly. It's a good 12 points. And now you're in the trading range. So focus on the gaps. Gap below 16. Bulls want to set a double bottom. They want to keep their 12 low. Like double bottom at 41.19 now. Bears want to break this. They're probably going to break it. So why the 11 high and not the 10 high? Well, let's put a line there. And then let's put, I don't know, a 2-minute chart here. Where's the lower high on this leg down? Right, it's there. It's not there. It's there. On the 1-minute chart, it's probably even more obvious that it's there. So once they break that one, it's that bar. So if you sell the close of that bar, your stop goes to above that 11 high. And we didn't break the 10 high, so if you're keeping that as your stop, it's fine with me, but I'm saying that if we break above that, 11 is going to be the pivot point for the measured move target. Okay, the bears are trying to break now this whole range. So I'm now looking at this range to that range. If we break below it, measured move would be 41.1050. We're going to hit that 18 now. And that's what I said. Like, so you have a strong measured move. You come close to it, you will reverse back up, only to hit it moments later. But we haven't even done that yet, so could even go again up, and then we'll hit it later, maybe even tomorrow. But I'm thinking we're going to hit it now. I think 16 was a good bar. Probably going to get 16.50 and 11. But it's trading rangey, so don't sell low. And so if you sold more at 11, you could now exit at your original close at 11, right? I said the same thing when I opened. So if you didn't pay attention at the pre-opened message, there's a recording of that, but I said the same thing was happening here, where if you buy something and it goes below it, price comes back to that close of those bars so that you can exit at the original close of your first entry. And so it did that here the same. So it went above 11, it broke that lower high. Price comes now down to the 11 close and stalls and might even reverse. So it doesn't matter which close you sold as a bear, you could always have made money. And that's usual. If you're in control of the market, then you can always scale in higher and get back to your first entry. Now, I'm looking at the 15-minute chart. We just broke below it. So it makes sense that we're going to get a measured move here. So the high of that bar is 27.50. The low is 21.50. So let's find that. So that was 27.50. That is this high. And 21.50 is this low. That's 15.50. No, nobody takes a position long for a target short. That would be foolish to do. So just the fact that this is, someone's asking, because I think we're going to go to 41.18, wouldn't people buy there? No, because there could be other bear target. There's another bear target in play here, which is a failed wedge. And so bars 1 to 8 formed an opening wedge, and the reversal is not looking all of that good. So it could be that the wedge is failing and that we're going to go to, I mentioned it before, that we're going to go to 410275. So the fact that this is a bear target and we're probably going to reach it doesn't mean that this is an excellent place to go long. It just means there's a chance of profit taking and support and all of these things. But that was 4122 as well. So 4122 was the low on the daily chart on the Globex, and 4125.75 was a target on the daily low on the RTH chart. Well, we're 6 points lower by now. So the fact that there's profit taking there, yes, it's a good trade for the people that took it. But 4118 is a target for the bears. It's not an entry point for the bulls because it's a target for the bears. That is reverse logic. That's just gonna, like, if this goes down, 300 more points today, you'll be like, yeah, but I thought 4118 was like the point where the bears would take profit. Well, if the bears get more, they take more. And so right now, I'm thinking that we're going to go to these levels, at least 4118, but these levels are now in play. And so I'm thinking that we're going to go lower. But I'll be happy already if they hit 4118. Especially because I've been mentioning it all the time. Then I want the market to hit it as well. Hope that makes sense. I never try to like patronize or say that it's not, but I just want to be clear. So that's why I'm phrasing it the way I do. Okay. So profit taking or profit point for the bears is not a go long point for the bulls. It's just that if we now go to 4118, don't go long there, but if we do, there's going to be some buyers below 18 because it's an inside bar. But it's a bull inside bar, so it doesn't really, like, I don't use it for buying below or selling above it. I would sell below it more likely than to buy below it, but I'm just happy with my signal here on the 50-minute chart, and then 41.1550 or something was target there, so I'm taking that. So what's happening here, same thing as what happened here. Like we went above 11, we failed. We go above 11 again, and then we failed 2 times. If we fail 2 times, the bulls in this case gave up. So we go below 12 once, we go below 12 again, and bulls will now want to buy and get this up, but chances are that the bears are going to get this down. 18 is a small bar, so if it falls down, we go to 1625, measured move 18. This is the nicest thing. So I don't know if you've noticed, but I'm looking a lot at higher time frames and stealing targets from the higher time frames to the lower time frame. My first target was based on this pullback on the 60-minute chart. That turned out to be 4130 or something. Then I looked at those targets on the daily chart. I used those. And now I'm stealing a target on the 50-minute chart to 4115.50. Okay, so I'm stealing from the higher time frames, using on the lower time frames. Someone's asking, what is the tool that you're using for measured moves? Well, I use Fibonacci drawing tool. So what is that? The Fibonacci extensions? No, the Fibonacci retracements. And so I have 50% and then 100% and then 200%, or however you put that in NinjaTrader. But it allows me to measure this, for example, to the close, and then I get 1-time risk reward and I get 2-time risk reward. And then if I just want to measure a measured move, I just do it like this, and then I disregard what I'm having here because this is the measured move. So. But since Fibonacci is nothing that I use, I don't need that tool. This is ETH. 60 minutes here is ETH. 50 minutes as well. And I have 60-minute RTH here as a tab, but I don't usually look at it. have it here because some people in the trading room use it. So you can see 4103.75 is a measured move on this range, and it's our failed wedge target for this range. So I'm beginning to believe that we're going to see this 4103 today. With more and more certainty. This is my 60-minute chart, Globex. So this is 5 to 6 p.m. Or what is it, 4 to 5 a.m., 5 to 6 a.m., I don't know. But this is the bull bar that I was measuring a measured move for. So you see trading range, right? Breakout fail. The targets are below, but we're stuck in a trending trading range. We need one more good breakout to make me believe that we're going to go to 4103. I'm thinking that we will. Nice little trend line here now. And then so if we break it around lunchtime, then we could get to 4103. So why would this be a failed wedge? Well, it is a wedge on the 5-minute chart, and so you would expect some sort of reversal, 2 legs, 10 bars, 2 legs. But on a higher time frame, this is a spike, right? And so if you see a wedge like this, this is so bearish, and it's such a tight channel that on a higher time frame it's a spike, and it could be a spike in channel. And so on the 5-minute chart, that would be a failed wedge, measured move down to 4103. Here you can scroll vertically here. Just like this. Usually a long trend that fits in a bear channel for a long time, or in a bull channel for that matter, gets a breakout below the channel. So a bear breakout below a bear channel, or a bull breakout above a bull channel. And that is usually the final leg of the trend. And so we could be in a scenario, I won't be here to live it, I guess, because I'll be out of the trading room in an hour, but somewhere today we could be like in this bear channel and then fall below the bear channel and then find our way back up. Unless the bulls do something that makes this channel obsolete, but that is usually how bear channels end. So if you're following this bear channel along through the day, and we break below it, then that should be a sign to take profits. And that should then be around 4103. That's why I'm thinking this could be a lunchtime drop, because if I'm measuring this channel for the width of it, like around 12:30 would be the time where if you would break down below the channel, you would get to 4103. Oh, I think, Ted, I think what you mean, I hold control while I move the mouse around. So if I just want a little bit more, like if I want price to go more down, I just like hold control and then move up and down. And then with the y-axis here, I can control the zoom, but with control, I can move the price around. I think there's a trick. Some chart packages, like the first one I ever used in my life, didn't have ways to control where price is on the chart. And so, like, if I would be trading a bear trend, it would be like here, the price would be at the right bottom. and it sort of limits your thinking because you think that price cannot fall below your screen for some reason. So it's visual deceivement or something. I need to have white space here so that I can imagine myself what's going to go on this white space, and I need space below and above to have more, I don't know, thinking of what could be taking place right there. So if I'm in a bear trend, I cannot have the screen like this. It just doesn't work. You always have the feeling that price is hitting the edges of your screen and therefore cannot go higher or lower. And it's just, yeah, tiny little tricks that you pick up along the way, right? All right, so the bulls are scalping, right? The bulls are scalping new lows. They found out that every new low goes back into the range, and so yippee-ki-yay, they're taking like 2 points, 2 points, 2 points here. The bears are comfortable with their stop above 16, although they're on a mini scale, you would say that the stop above 17 for some bears got hit and that they would exit. But I'm thinking that we're in this bear channel. It's a trading range, but it's also a channel. So it's, what is it? A trending trading range. Bears are not willing to sell at the lows. They're willing to sell higher. Bulls are scalping at the lows for a couple of points. And so on the 15-minute chart, like what I said here, we went below and we want to get measured move down. If we go above, then we'll go back to the middle of that so that whoever sold here and who sells more here gets out break even. So I'm not concerned for bears selling there. They're still holding. Now the hourly chart is getting a little bit parabolic, right? 1 leg, 2 legs, 3 legs. So you can see a higher wedge, but very little buying pressure in all of this today. So nothing to go long, just to be mindful of when you're selling. It's much easier today to sell than to buy, right? A 2-legged pullback, pullback 1, pullback 2. So below 20, the pullback is over. We could go down. In terms of high twos, low twos, you could argue this is a low 1, then higher, and then this is a low 2. So sell below 15 and hold for one of these targets. You're in a bear trend, so you would never sell, you would never buy a high 1, right? So you could say, okay, if I never would buy a high 1, then I scalp a high 1 short. But you can't buy anything against all of this, This would take lots and lots of bars to convert into something that's really bullish, right? And so you decide to not sell at the low anymore, that's fine, but then sell higher, 50% pullbacks, for example, from the last leg. So this leg down, 50% pullback, so you could start selling here, save some room maybe to sell higher, but if we had a low 1, up, down, so below 20, that pullback, that 2-legged pullback is over. It's now a wedge pullback, 1, 2, 3. So below 21, the wedge pullback is over. And I understand that it's sometimes difficult to sell in a bear trend if you're at the low, but beginners often confuse that with them going long. And being scared of going short does not equal them just going long, right? You got to get that mistake in your brain as one of the first things. If you're scared to go short here, that's fine. And enjoy prices going lower without you, or higher, whatever. But you should not be going long just because you're afraid to go short. That is, if you can just eliminate that mistake, then you're already a good chunk ahead of everybody else. We haven't even touched the moving average today, right? So there's bears waiting everywhere higher, and We could go higher, but by the time that we're high, we're too high for you to buy. So it's just better to look to short in all of this. And again, if you're not seeing bear trends correctly, just look at the mirror chart every now and then. Okay, nice trend. So spike and channel. So if you see this as a spike, you see this as a channel. Well, then you draw the same channel here as I was drawing there. And then so it should continue higher, at least the measured move based on all of this. So that's 41.11. Move based on all of this. So that's 41.11. And the pullbacks are getting deeper because the bears want to sell higher and higher. The only thing you can do is do the same as what the bulls are doing, saying, well, every time we get a new low, it comes back into the range. So get a new low, it comes back into the range. Get a new low, it comes back into the range. So you can scalp maybe 2, 3, 4 points as a bull, but the danger is that we get one big plunge and it doesn't come back, right? And so 2 points, 2 points, 2 points to lose then 20 is also not worth it. There were a lot of bulls, there were a lot of bears waiting for that 41.18 that I mentioned, because we hit it twice and we reversed back up. So definitely profit taking from these 60-minute measured move bears. We're also at, what is it, a good 34.18. So that was about 16 points from the low of bar 2 and the low of bar 1. So there's more than 12 points. But you got to be thinking here that what are the bulls showing here? Like zero strength, man. It's like, what do you get? 4.5 points. Woohoo. So you see that like it goes up, comes down, goes up, comes down, goes up, comes down. So if anything, the bears are shorting here instead of here, but the bulls are not doing anything to overpower these bears. Stop is above 16 or above 15 if you want. And if you're in it for a new low and you put your stop here, then this is actually a perfect 2 times risk reward, right? You enter here, you want to get out at a new low, so 2 times risk reward, selling here, getting out there, okay? And your stop is then there. Now, the only good thing for the bulls is that every bull that bought a bull close made money. This one, this one, this one, and this one. These bulls got 1 R, and that was the signal for these bulls to start buying as well. So once everybody saw that the 12 bulls by the close, they got 1 time risk reward, that was when the 19 bulls thought about doing the same, right? So they want 24.25, which is 1 time risk reward for their. And the bears saw this as well. And they know that we're in the trading range, so they'll get out at the lows instead of starting short positions at the lows. They'll get out at the lows. They'll get in here, they'll get out at the lows. Get deep pullback, they'll get in again, and they'll get out at the lows. And that's how a bear channel like this sets up. There's a good chance that today will close above 25.75. Why do I say that? Because of the daily chart. So if this is the low that bulls are trying to protect, sorry, I need to do it on RTH. This is the low that bulls are trying to protect, then because we haven't collapsed right through it, there's a good chance that we will close within this 25.75 range, so that the bulls can argue it's a failed breakout. If we go much lower to the 41.03 and then 40.9825, then there's probably not going to be enough time in the day, unless FOMC minutes do that, to get back to that 25.75. So it will be between, are we going to do 41.03 and then here 40.9825, or are we going to stall around here and then chances are high that we'll close the day higher than 41.2575, which we are exactly at now. Okay, so I think that the filled wedge is definitely off now. So the 4103 target is with 22 and 23 not a target anymore. So it's also not a bear trend anymore with 23. Bears are gonna sell 16 high and then get out. And the bulls are gonna target the gap below 3. So one buy here. Like there's a big chance it will come down to the 16 high, so you can scalp short to the 16 high. There's sellers at the 50-minute chart high, right? And so if someone that sold 2150, which was the 50-minute high, sells more at 2725 here, wants to get out at 2450, 2425. First time that we touch the moving average, so that's good. Probably going to close the gap to the 3 low. But if they can get back to that 38, we'll definitely need a pullback first. We'll definitely go touch that 16, but we could set up a measured move first and then touch the 16th low. So let's see the follow through, but this is buying too high. It's still a trading range. This is buying too high. So on the 5-minute chart, nobody is stuck because if you sold more here, you got out. So no bear is stuck here. And so it could continue higher. On the 50-minute chart, the bears are stuck. And so they need, what was it, 24 or something to get out. And alternatively, they'll sell more at 4138. To get out 3125. So best thing now is to wait either if we can see 4138 and then short, or start shorting here, start shorting more here, and then get that 4133 or something. So 4138 is what the bulls will want to get to. That's also the gap here. But this is too high to buy for 4138. And why is that? Because your risk reward is all screwed up, right? So even if you buy this close, you can only, you need to take one-time risk reward. It's not that high of a probability. So buying this close can only be done if you can buy more lower. Okay, so we close the gap to the 3 low, like I said. Can we get to 38 immediately? Okay, it's likely that we're going to hit, what is the target here? 3750, so 38 is going to be our bull target. Then there will be selling around 4138. So right now, so if we don't hit 4138, we're going to hit 4124. If we do hit 4138, we're going to hit 4131 back from 4138. But let's see what happens. I'll explain that when as it happens. So looking at what happens at this breakout point, I said in the beginning, before the open, you'll usually see a breakout moving a couple of ticks into the breakout point and then reverse back. So if that now happens, then this is the range that is the breakout, and then 3750 is the target. If we go further down, then it's a failure, and then we go back to 24. These bears on the 15-minute chart, they can get out break even. Right? It's just a question of can they get out break even at 24, or do they need to sell more at 38, and can they then get out break even at 31? Trying to reverse up from the breakout point. So let's see. So how does this work on the 5 minutes? Well, on the 5 minute, if you're a bear, you're selling, your bear trend was over on the 11 high. You got a test of the low. And so you could sell here, you could sell here. You had a lower high here. That broke, like it broke here. And then you got out break even or with a profit here. So at this point, there were no sellers left, maybe below 18, but when it got to above there, they sold and broke out. And then they couldn't sell below 19, they couldn't sell below 20, 21, 22, 23, 24. So they couldn't sell anywhere in here. And so there were no bears in there. And so that's why it breaks out to the upside. So the only bears that are stuck now are the 15-minute chart bears, and they need 24 to get out. I'll pull up the 50-minute chart when we get there to see how that works. Okay, we just got there. So on the 50-minute chart, it's the same thing. It's the same thing. Okay, 50-minute chart, you sell, no, this is a pullback. Below it, the pullback is over, so you sell below it, one tick. You're hoping for continuation, 2 times actual risk reward or something like that. You don't get that, but you sell more above that lower high there, and then you get out break even at 24.25, right? And the low was just now 24. So 24.25 was exactly what these bears were wanting. And so the 5-minute bears are out of a trade. The 15-minute bears are out of a trade. And so continuation up is now what they want. And then 41.3750, 41.38 becomes the next target. So if this pullback is over, so this is leg 1 of the pullback, 25 is leg 2 of the pullback for bulls. They want to measure move, breakout above 24 to 35 and then 37.50, 38 area. But buying above 25 is a high one, so you got to be careful. There's still a gap there. But the reason that this went down to 24 and not a tick lower is in the 50-minute chart. It was also expected on the 60-minute chart that a high one would not break out immediately, right? So we went for the second time above a bear bar on the 60-minute chart, but it was going to sell off a little bit. So it's still best to be flat because the shorts are, the only ones that are in a trade are the bulls, but it's not looking good, right? So some bulls even exited here at the close during 25. This could be a big bull trap, and then trap us all the way down. The size of that bar, right now, I do think it's going higher, but I would want to buy a pullback, not necessarily a high one. Gaps are closed, that's nice. The 50-minute bears are out, the 60-minute bears have a measured move, so there's good reasons to go back up. I would only want to buy around here because it's also the first time that we touch the moving average. It could still be a little bearish. So normally I measure like a 1 hour based on, like for example, bar 23, but that is over if bar 24 is not a consecutive pull bar. So that target on 24, that target from 23 is not valid on 24, and that's why people exit during bar 25. What we now need is to break above 25, which would be then a measured move up to 35.75 and then 37.50. Why is that? Well, because again, we're in a bull leg here, and there's a bear pullback, leg 1, leg 2. You could argue it's sort of a high 2 because of the 2 legs, but I would be cautious. But it's leg 1 down, up, and leg 2 down. So there's a 2-legged pullback. It's more than 50%. And so above 29.50, above bar 25, that pullback is effectively over. And then we're still making higher highs and lows. But our bear trend is canceled. Our possible wedge measured move down is canceled with 22.23. And what I said, like you need a break, a clear break from all of this bearishness, and then a pullback, and then you can go long. And that's exactly the sort of setup that we're now hopefully getting. We don't know yet, but that was how I said that was the only possible way that I want to get long is first a good break. Okay, this break had momentum, but then I would not buy the break. I would definitely buy when that comes down to test the lows as it does now. And now, even now, I don't want to buy after these three bear bars. If they close like this, I don't want to buy. But this would be a reason, like this would be some sort of major trend reversal, right? A trend, a break from the trend, a test of the lows, a pullback, and then a higher low major trend reversal, or if they fancy it, even a lower low major trend reversal. But a higher major trend reversal is more likely. Bears want to get to 2150, they have a good chance, and that would eliminate this bar 23 measured move. All right, so three-legged pullback now, above 26 is the buying point, but it's scary. It's right at the moving average. It's after three bear bars. So you'll be taking it on the premise that you know that the bears are out of a trade, and then you'll want to take 2 times actual risk to 31.75 and hopefully go to 37.50 and 38. And your chance is that we go to 27.50 as well, minimum, but that's already almost at your entry point. So, it's a credible buy, but also a tricky one. Because after three bear bars in the trading range and a high one is usually not a good buy. Chances are that we're still going to go below 23. And then bears want to set this up as one big bull trap and then get a measured move the size of 23 and 24 that we just had, and then it just collapses down, and then we get 41.09, 41.0875. Or even 41.03 anyway, right? This is very typical on a bear trend day. A huge bull explosion somewhere late in the trend that makes you want to buy somewhere here as it's happening. And it's just too high in all of this. Right? There's sellers here that will get out, break even, in this case on the 50-minute chart, but often also on the 60-minute chart. So like bears that buy, bears that sell this close, they sell more above the bear bar to get out break even. So expect on this hourly bar at least a 50% pullback. Well, that's right at around here. So that's what we got. And that's just because they own the market. So I'm always looking at who owns the market. The team that owns the market can always get out break even on wherever they enter, a close below a bull bar. They own the market. That's just the privilege that comes with owning the market, is that you can always get out break even or with a profit. Okay, so the bears are doing exactly what they're. We didn't go above 26, right? Which is typical. So we didn't trigger the buy. And so instead, we're triggering the sell. So as a bull, you never got stuck here because you never bought. And basically, it was an endless pullback. But now, the bears want to break out, see this as a range, it's a failure, so there's a high chance of actually going now to 4,108.75. But by the time you hear this, you're already at the low of the trading range, right? So you can argue now the same for bulls, right? So bulls said, okay, we're going to buy above this lower high. We're going to buy more here. We want to get our break even. That is 24.75. We can also buy more at this and then get a break even from there. Then we need 16.75. So if we go to 41.08, then we want 41.18-ish. If we don't, then we want to have 41.24.75. And that's valid as well, because in the trading range, if bulls can scale in lower, they can usually get out break even as well. And it's not a bear trend because of the higher highs and the lower lows, right? It's much more triangle, roughly, than a trend. So consecutive surprise bars, 41.13, 41.08. And you see what's happening here. Bears are not willing to sell at the low of this range. Bulls are buying to get out. So they're buying around this low, or about around that low. If they don't get out here, they'll buy more here and get out then at around 16. Here, they'll buy more here and get out then at around 16. All right, so I'm expecting for the rest of the day, well, look at the hourly chart, right? It is getting, yes, it's getting climactic, right? So leg one here, this is leg one, this is leg two, and then this is leg three. They're sort of the same in size, so the credible parabolic wedge, but usually that doesn't transform into two bars, two legs directly. So it could be that we're going a little bit lower, but we are definitely stalling here. There's multiple support points. I said that we're going to finish the day higher than 25.75, and I still believe that, even if we go lower, just to make sure that there's a failed breakout on the daily chart. So that low 25.75, I think it will be a magnet for the rest of the day. And basically, I'm expecting more sideways here. We could, even if we go lower, I'm thinking that we're going to go to 25.75. That will be a magnet throughout the day. You can see how we're oscillating around 25.75. And then at 8 p.m., 2 p.m. Eastern, there's going to be some FOMC minutes. So that could trigger a sell-off to 41.08. And then we get back to 25.75, or it could trigger a bullish move to 41.38 area, and then we sell off again to 25.75. So all in all, I think that we're oscillating around this price. You can see that we went exact to the tick, almost one tick less, that we went as far high from that 25.75 as that we went low from the 25.75. So we're literally oscillating around that point. That's why I think it's important. No, that's not the reason. I said it was important before, and now I see that it's important because we're oscillating around it. So good chance that this will be the trading range for the rest of the hours. So focus on the gap. So gap here. So we go up, we come down, we close that gap. We go down, we leave a gap to the 26 low, we close that. And then as we go up or down more, we're going to come back constantly closing all of these gaps. If you look at the whole chart of today, there are no gaps left, right? So every gap, including the one to the 2 low and the 3 low, has been closed. And that is trading range behavior. We have higher highs and we have lower lows. So it's also some kind of a triangle that will stay stuck in. So buying low, selling high is going to be the remaining theme for the rest of the day, I think. You can also see that on the 50-minute chart. We're now going sideways, and we're making a nice zebra pattern here on the 50-minute chart. 60-minute chart is at support. 25.75 is the target that bulls will want to close the day in. Bears will want to get to 41.08 area, which would be the measured move from this range, 41.0875. But chances are higher that 25.75 is a magnet for the rest of the day. All right, so we have 10 minutes left just to go over some questions and whatever you guys have on plate for me. Let's see. Richard Williams says that I should have mentioned names on the recording. Someone's mentioning that the 60-minute chart is off for him. We can check that, sir. So let's take that off the line. Is taking a small loss a valid alternative versus trying to exit break even? I find it hard to take second entry point and also bigger risk with 2 lots. So if you can't, there's 2 things that you can do. So if you know that you're in the trading range, then don't take the trade on the breakout. Just only take the trade that other bulls and bears are taking to break even. So if you're seeing here that we're in the trading range, and you know that people that sell below the 9 will sell more above the 11, then don't sell here. Just only sell for that scalp to above 11. Sell here and not here. Bears will sell here and they sell more here and then break even on their entry and make profit on their second entry. If you can't fill in, then don't sell here, then only sell here. Chances are that the trend is going to continue without you. That's fine, but you're in the trading range here, so you can only sell high then, right? If you have only one shot. And then if it goes even higher, where bears would sell higher and then get out break even, that's why you just exit and take the loss. But in general, even if you can't do that, think about what would happen if you had done that. So that is how you practice ultimately and how you set yourself up for success once you get to a point where you have scaling capabilities. So in this, for example, I would take maybe 10 to 20% of my position targeting the breakout. Maybe I get this huge leg down and I get that. I would then sell about 30, 40% more on the failure and then make money. And then I would sell my remaining position, go all in, if we hit a measured move and then come down and I'll exit. And then in all cases, in that sense, and then make money. Just in the case where I catch the actual breakout, I don't make as much because I took a very small position there. But I'm usually good in that estimate, so I sell a little bit here, more here, and even more here, and then get out break even. So if you can't do that, then don't take that one. Just only take that one, scalp for a couple of points. Before you know it, you rack up, 20 points in a range like this. And then if it goes even higher, picture how you would have managed that if you would be able to go to scale and higher, and learn that skill so that when you're ready for it, you have that skill already and you don't need to. But you don't want to get to a point where you then finally make it, and then when you make it, you then have to change your style, right? So set yourself up for success from the beginning. And there was a lot of things about scrolling. Hi, Tim. Do you think psychologically BTR24 will limit any upside the bulls would have otherwise had? Yeah, the upside. So the question is, do you think that because 24, the upside, if bar 24 wouldn't have been there, would there be more upside for the bulls? Well, what the bulls were hoping is that they would get a measured move on bar 23, so that was 37.50. That hope got slammed down by 24, and so they exited here at the close of 23. But their target would have been 37.50 only, right? Yeah, and it would not break to a new high of the day or something, just because of all of this bearishness, the average price, the 50-minute. Had the 50-minute chart been different, maybe the price action would have been different. What's a W long? Double bottom long? I don't know what that is. Okay. All right, so I think it was good to see that 41.18. I think it was good to see the 41.25.75 on the daily chart. I think it was good to see the 41.22 on the Globex daily chart as targets going into the day. The only other target is actually a one-time risk based on this bar, so 40.91.75. I have not excluded the possibility that we're going to go to that area. The reason I'm saying that is we failed the 23 bar, and so usually that sets up a measured move down from there. And we have that daily, what was it, RTH, we have that gap there, so that is 40.98. That's dangerously close to the 41.03 and the 41.08. So I have not excluded the possibility that we're going lower, but it will probably take the FOMC minutes to get there. So right now, I think 25.75 is the most important price. If we clearly break out below, then I think this 41.08 to 40.98 area is going to be important. I think we're going to get there, but there's a question about whether we're going to get there today with all of this support here at 41.22 and the 41.25.75. So we'll see. I think this is more sideways now until 8 p.m. So it's gap closing and gap closing. And again, at the moment, there is no gap. This was a low one and it failed. So we're trying to find now a low two, and then we could see if we can get continuation down. So those are my scenarios. If we get a measure, if we get more bullish action during the FOMC minutes, then I think 41.38 is the magnet. But right now, I think 41.25.75 is the oscillating point. So I would not be buying above that, and I would only be selling below that if I had good signals. So this is, for example, the 28 low. Well, can we break up below it and then set up a measured move and then go to 650? Well, if we don't break below that, I do think it's more bearish than bullish, even with 23 and 24. I do think that there are targets there that we need to reach. But the question is always, do we need to reach them today or not at all? But, so I do think looking at shorts is the better option, especially now with this 23-24 failure. But also be mindful of just FOMC. So right now, just hunt for gaps and make sure that you only, if you go long, only go long as low as possible. Don't go long anywhere in this area, especially not above this oscillating point, 41.25.75. All right, so let's see, no more questions. Okay, hourly bar is closing as well. Let's see. Yeah, it's that high one was going to fail here. It sort of is now two legs, and it's setting up the third leg since here. So if there's a wedge on the large scheme, 1, 2, 3. There's also a little wedge here forming 1, 2, and 3. So it might go a little lower before reversing up. But we are at various different support levels. So the downside is limited to 40.98. And the upside is limited to 41.38. All right, that was it for me. Thank you very much for attending. Good trades, everybody, and talk to you all later. Thank you very much. Goodbye.